The chairman of the China Securities Regulatory Commission, Liu Shiyu, told the press on the 19th anniversary of Hong Kong's handover to China that the Shenzhen-Hong Kong Stock Connect trading scheme would definitely take place this year. However, the project is stuck in technical issues. It could not give a time for it to begin. Let's listen.
The program connecting the Shenzhen and Hong Kong stock markets will not start anytime soon due to technical issues. This is according to Liu Shiyu, chairman of the China Securities Regulatory Commission. However, Liu did say the connection program will begin within the year. The current stock market link between Shanghai and Hong Kong has seen larger turnovers on the strength of investor morale. Funds have been pouring into Hong Kong from the inland market for 41 trading sessions since late April. Only a quarter of the program's southward investment quota is still available, and analysts say the remaining quarter may not last long. Mainland financial website Hexen reported the link between the Shenzhen and Hong Kong Bourse is at its final testing phase on Friday. It said the Hong Kong Stock Exchange tested the system's connectivity on June the 27th. Earlier, CSRC Deputy Chairman Wang Jinghai said technical preparations for the Connect program between the Hong Kong and Shenzhen stock markets should take about 4 months.
And U.S. markets are closed on Monday for the Independence Day holiday. Now let's take a look at how the market closed on Friday as VOA Channels TV correspondent Jill Malandrino reports.
Good evening from the NASDAQ market site in Times Square. I'm Jill Malandrino. Most of the post-Brexit equity sell-off has now been erased to close out the month of June and first half of 2016. The Dow Jones Industrial Average is coming off of 3 consecutive days of 200-plus point gains. For the month, the Dow is up 0.8%, the S&P gained just about 0.1%, and the NASDAQ at the bottom losing 2.1%. Markets were once again boosted by central bank easing talk. African markets recovered as well, as indicated by the VanEck Vectors Africa ETF, ticker symbol AFK. This is an exchange-traded fund that tracks the performance of the GDP Africa Index, which is up 4.25% since the Brexit vote. Let's take a look at what's making business headlines on the continent. Nigeria's Niger State plans to seek bondholders' approval next month to restructure its $21 billion Naira, or 74 million U.S. worth of debt, its advisor said on Thursday, as it seeks ways to ease strains caused by a plunge in crucial oil revenue. On July 28th, Niger will meet with bondholders to approve an extension to its 5-year debt due in 2018 to 2023 and an increase of its coupon from 14% to 16%. Nigeria's stock market is becoming the most interesting one on the African continent to foreign investors after the country devalued its currency, said Mark Mobius of Templeton Emerging Markets Group. Templeton has around $700 million U.S. of assets under management in its dedicated Africa fund, which has its biggest holdings in Egypt, Nigeria, and South Africa. It was just announced this morning that Nigeria has signed oil and gas infrastructure agreements worth $80 billion U.S. with Chinese companies, according to the state oil company. Kenyan growth picked up in the first quarter of 2016, helped by improved performance across the economy and especially tourism, the Statistics Office said on Thursday. The economy is estimated to have maintained the growth momentum that started during the second quarter of 2015, according to Kenya's statistics. The most notable improvement was a rebound in activities of accommodation and food services. Have a great weekend, everyone. From the NASDAQ market site in New York City, I'm Jill Malandrino for Channels TV.